Hello, fellow traders. Marv Eisen here from Timeless Dollar Trading Academy, and another week is in the books. So let's see what's going to happen going forward. Now, on Monday, February 24th, there are no announcements scheduled, so there's nothing that's going to affect the market announcement-wise, no surprises. But there are plenty of surprises in the news if you just turn it on. And as you know, there are a lot of unsettling things happening, but I always look at the numbers, and numbers don't lie. It's the only thing that's sure that you can count on. Now, one thing that I noticed on last week's market, on Friday, now the S&P closed much lower, and I want to trace back. This is the election right here, November 5th. This was the election where the market opened positively when Donald Trump won the election. But one of the first things that Donald Trump did is announce that he is going to move forward with tariffs. Now, friends, I don't know what side of the political spectrum you're on, but tariffs increase prices. That means they increase inflation. And if you don't want to believe me, I'm sorry, change the channel. Tariffs will increase prices. And so for that reason, the Fed, who had been reducing interest rates, all of a sudden put those interest rate reductions on hold, and now where the current target rate is 4.25 to 4.50, the March 9th FOMC meeting, here it is, March 19th rather, FOMC meeting, the odds are 94% that the Federal Reserve will maintain the interest rates at the current levels, 4.25 to 4.50. And so that's just what it is. Tariffs increase prices. So we have to move forward thinking that this is something that we have to take off the table unless Trump decides he's going to eliminate tariffs. And Trump is flighty. He changes his mind at will. Today it could be tariffs. Tomorrow it could be less tariffs. It could be 25%. It could be 10%. We don't know. But this is tariffs is something that he's always said he wants to do. And he said they are beautiful. Friends, they're not beautiful if you are a long-term investor. Day trading, that's something else. Has nothing to do with day trading. But nevertheless, let's move forward. Stock market business news, CNBC. Fed is stuck in neutral, which is just what I showed you, 94% probability that the Fed will maintain interest rates at the current levels. Now, let's look at the previous week. Now, in the previous week here on Wednesday, February 19th, the market opened right over here. Exactly, this is my trading zone. I drew it out. And as you know, Monday, Wednesday, and Friday are better days to trade than Tuesdays and Thursdays. So I tend to favor that, particularly if our prices are coming in at the top or bottom of the trading zone. And on Wednesday, February 19th, the market opened at the bottom of the trading zone. And as you know, we wait a half an hour to an hour here at 10 o'clock. Prices bottomed out, moved forward, and they took out the previous high at 61.36. And where'd they go? Right up to the top of the trading zone. The trading zone is, to me, it's the most important tool that traders can have. It's an indicator like other indicators, and I use these stochastics, as you can see. But when I was a scalp trader, I never thought I thought the stochastics was the holy grail of trading, and didn't work out so well for me. Probably for you as well. Check out the tailored calculator. You can get it at my site at timelessdollar.com. I'll give you a little more heads up on that a little later in the video. And so this was Wednesday, February 19th. Now moving forward on Thursday, the market opened at the bottom of the trading zone, traded down, quickly made a low down at 61.03 just before 10 a.m. Okay, just before 10 a.m. Just about 10 a.m. They made a low that bottomed out. For those of you who know how to transpose the trading zone, I'm going to transpose it to the intraday high that was put in right over here. And this is where the market bottomed out. If you took a trade at 9:30, you probably made, about 25 points. That would have been pretty good. But nevertheless, Thursday's not a great day to trade. Let's move forward for Friday. Now, Friday is a whole different story. The trading zone, I drew it out on Friday as the numbers predicted, and the market opened just at the previous close, at Thursday's close, right here at 61.37, just about there. Traded down, and this was a time and price trade. And for those of you who've taken my course, you know one of the 6 trade setups, there are only 6 trade setups. How hard is it to learn 6 trade setups? The time and price trade, and here it is. First leg, equilibrium. Second leg, okay? And so what you want to do is trade the second leg. The first leg and the equilibrium are the setup. And I'm going to draw it out. I'm going to put it on a 10-minute chart, maybe you'd see it a little more plainly. Okay, here's the 10-minute chart. What you do is you you look for the setup. Here's the setup. And the market sought equilibrium over here. And by the way, this was right over here, this was the stop loss. The stop loss was at the top of the equilibrium. Now, generally on the time and price trade, what the market does is it puts in a stop run just prior to the actual movement. So basically, if you were stopped out here and the market continued down, you were stopped out, jump back on, and you'll make up this price. And you could have made up 60.92 to 60.40, about a 50-point day on Friday. So that's the time and price trade. You have to know these 6 trade setups. So that's my video for today. Monday, Wednesday, Friday, best days to trade. Nobody knows which way the market is going to go, particularly with Trump's midnight tweets, because he can change like he changes his underwear. I hope he changes his underwear. But we don't know which way the market is going to go. That's a problem for the long-term traders. For day traders, use your trader, your Taylor calculator. Use lots of patience. Watch what happens when the market opens and puts in the gyrations between 9:30 when it opens and 10:30 or thereabouts, and look to where the market takes out the previous high or low. That's the direction, in all likelihood, the market is going to trade. So if you want to see how you can get the Taylor calculator, you can grab it at my site at timelessdollar.com, right here. My site, timelessdollar.com. Click the link, Taylor Trading Calculator, and you'll get it, and you can see what it's like. Looks very complicated. It's not complicated. The calculator, all these numbers are automatic, and these are construction lines. All you need to do is enter the date, and the date is, you autofill the date just like this. Autofill, weekdays only. You click the selection box, fill weekdays. You fill weekdays only, and then for those days where the boxes are in green, you fill out the open, high, low, and close for that date. And you get the numbers for the following day. And you draw it on your chart as I have. Okay. Draw it on your chart. Let me go back to my 3-minute chart. I like the 3-minute candle. I like the 3-minute chart because it's long enough to give me the hammers, which are a very important trade setup, but it's short enough to really give me a sense of which way the market is going to go. So thanks so much for watching. Trade safely, use lots of patience, and I'll see you in my next video. And I have something very special coming up for all my viewers. Trading is a highly risky endeavor. Most traders, unfortunately, lose money because they don't bother to learn how to trade. I'm working on something that is as close to 100% sure thing of giving you long-term financial security. And this is something that I've been working on for a long, long time. And I'm going to be talking about it more and more, and you're going to see it on my site very soon. Again, thanks for watching. Marv Eisen for Timeless Dollar Trading Academy. Trade safely, and I'll see you in my next video.